So it wasn't the most interesting day in the stock market today, guys. It was one of those days. We had the S&P up 0.1%, the NASDAQ 100 down 0.1%, we had the Russell up 0.25%, and the Dow up a whopping 0.3%. So we got to break down some stocks, some charts, my thoughts on the markets, plus more. So sit back, relax, hit the like button, check out my Patreon down below if you guys want my buy, sells, call outs, morning update videos, plus more, and you guys can get $50 free from M1 Finance, also linked down below. And with that being said, let's get right into the video. So what we notice here between SPY and QQQ, at least on the 5-day, 5-minute, is both of these ETFs, SPY tracking the S&P and QQQ tracking the NASDAQ 100, both of these are trading in a wedge, right? We're making higher lows, and the past 2 days, that is, we've been making lower highs at the same time. Hence why we're in this wedge. You can see it right here on my chart. And with today's choppiness, and by the way, we did have a decent amount of volatility today. The VIX was up 4.5%. With today's choppiness, we got deeper and deeper in this wedge. So to keep it simple, in very simple terms, all I'm looking for at this point is what direction SPY and QQQ, if I pull up QQQ, you guys can see it's the same thing. What direction are we going to pick? Are we going to break out of the wedge, take out the all-time highs from Friday, or are we going to fall under the lows from Friday? Do we end up going 495, or rather 395, 390? That's all I'm waiting for. Simply direction. That's what we're going to be watching out for. And if you guys watched my video from earlier today, we talked about how QQQ had, or I was seeing an ascending, or not an ascending triangle. I'm mixing up my patterns here, guys. We were seeing an inverse head and shoulders. You can see it here still. Left shoulder, head, right shoulder, and as of now, it's still intact. But the second we break the neckline, which is right around 397.50, 398, which is right where we closed, the second we break the neckline and the support of the wedge, like I said, this could go 395, 390, no problem. And the 4-hour chart kind of supports that, guys, because we've talked about how this is very overbought and SPY is very overbought. So watch the smaller time frames. Don't always look at, don't get me wrong, it's great to look at all the time frames, but keep your eyes on the smaller ones as well. I feel like a lot of people look at the broader time frames, the 4-hour, the 1 year. Sometimes you have to look at the 5-day, 5-minute, the intraday, especially if you're more hands-on. You're a day trader, shorter-term swing trader. These are the time frames that are really going to help you out when you're doing technical analysis and you're looking for overall direction. So to keep it short, sweet, and simple, look at the 5-day, 5-minute for the rest of this week, quite frankly, on SPY and QQQ, and we'll see what direction we end up picking. So let me know your thoughts down below in the comments. Make sure to smash that like button if you are finding value in this video thus far. And without further ado, the meat and potatoes of the video, guys, let's go over 7 stocks, most of which, I think 4 of these, reported earnings today. And I did cheat a little bit. I did look at these stocks before making this video. I'm sorry, guys. I'm sorry. Typically, I don't look at the stocks in earnings season, but today I did it. But hey, we're going to talk about them anyway, and let's get into it now. So number 1, we have PayPal, ticker symbol PYPL, and judging on this aftermarket hour activity, these earnings must have been not the best. Maybe initially the market was like, okay, they're good. Now the market's like, maybe not. Maybe they're not good, because look, we closed at 229. The stock shot to 245 after hours. Then it dumped all the way to 216, and now we're hovering a little bit under 220. So let me pop up the live news tab and see exactly what PayPal ended up reporting. And full disclosure, I'm long PayPal. I've owned the stock for a couple of years. I started buying at about 95. I averaged up on this thing. I think my average now, no joke, guys, it's got to be close to 200, believe it or not. I averaged up on this. I bought in the 150s, 200s, I recently bought at 225, 230. All you guys in my Patreon know that because you get all my buys and stuff, sells, all that good stuff, alerts. You get all that on Patreon. So let me not ramble anymore. Let's talk about their earnings. Q3 EPS came in at $1.11 versus $1.07 estimated. So they beat EPS, pretty solid there. Net sales came in at $6.18 billion. Okay, but that missed the $6.23 billion estimate. So geez, guys, I can't get my words right today. I was going to say double miss, double beat. Neither of those are right. They beat EPS, but they missed revenue. And for guidance, oh wow, this is lower than expected. They see Q4 net sales of $6.85 to $6.95 billion versus the $7.24 billion estimate. So that is a lot lower for Q4 sales guidance. Not the best sign, but full year 21 sales guidance is still pretty decent, 25.3 to 25.4 billion, which is just a tad under the 25.8 billion estimated. So it seems like PayPal, guys, it might want to go a bit lower, which I'm okay with because, in my opinion, this is all my opinion, PayPal, if it had one bad quarter, it's not the end of the business. It's not the end of the world. This company will still be here in 5-10 years from now. So, if anything, if you're in this as a long-term investor, hey, bring it on. Bring on the selling. Let's see some weakness because we could pick up shares at a cheaper price. And this stock has gotten decimated, guys, from $312. Now it's almost at $212. It's lost almost a whole $100 per share in value, which is close to 30%. This stock's in a bear market. And in my opinion, if you're looking at the overall markets right now, everything is near all-time highs. Google, Amazon, Apple, a lot of stocks. But PayPal is just getting their boots smoked, and it's one of the better opportunities right now in the overall markets. That's just in my opinion, and I've been putting my money where my mouth is. I've been buying PayPal. So, yeah, at this point, bring it on. If it goes lower, 200, 180, 190, I'm going to be buying more because I'm holding. I have a long-term vision with this company. So, let's go over stock number 2, AMC. This one just reported, and it was gaining some steam earlier. If you guys remember, earlier today, and I did make a post about this on Patreon, this one was starting to make a move towards the mid-40s, which is a very good sign considering mid-40s would have it above the highs from the middle of October, out of the wedge as well, and well above the moving averages. But now that they reported, guys, the stock is back to $42.50. So it's down about $2.50 in the aftermarket hours right now, and we know, come on, this stock is not moving on fundamentals. I mean, come on, it doesn't take a rocket scientist to tell you that. This stock is moving on pure speculation, hype, short squeeze potential, Wall Street bets. We all know this. It's not moving because they're opening a lot of theaters and everybody's going to the movies. Even though the movies are great, they're fantastic, the stock is not moving because of that. So let's see what they did and why the stock is down $2.50. So, and that's after hours, that is. They did Q3 adjusted EPS of negative 44 cents, which beat the estimate. Okay, good. The estimate was negative 53 cents. Not too shabby. Adjusted sales came in at $755.6 million versus $708.25 million. So they double beat for EPS revenue, which is fantastic. Let's see here. Any guidance? Probably no guidance. I mean, I don't know if they'd want to give guidance. October theater admissions revenues highest of any month since before the global pandemic. Hey, that's great. More people are going to the movies, myself included. I've seen, a movie or two in the past month. What's the other one I saw? I saw Halloween, which was complete and utter just trash. Oh my God, guys. I don't like hating on movies too much, but the new Halloween, oh man, it was just rough. I don't even want to get into it because I left the movie theater angry. I can't even explain it. I was leaving that movie theater. I'm like, And I bought tickets for like 6-7 people. My fiance, my dad, a couple people. I spent like $100, and I left the movie theater and I was like, that was just garbage. But either way, I guess I'm a more of an old school Halloween fan, and I think, don't get me wrong, the graphics, whatever, the picture, it was great, but the directing, it was just a bad movie in my opinion. But that doesn't matter. We're talking about stocks here, guys. So overall, hey, AMC, it's starting to gain momentum. Earnings were pretty solid, even though the stock is down about $2.50. We got to watch it, and I think if it breaks, like I said, 45, maybe the high from earlier today, 47, this could be off to the races. We're talking 50, 52 per share. That is where I think it's going. Let's talk about the next one, Lemonade. LMND. Let's pop it up. You guys know this is an insurance company. I don't know much about it. I haven't done a deep dive into it, but that's not the point, because they reported earnings and we have to see if there's any volatility, or maybe they did not report earnings. No, they did report earnings. Where the heck are the earnings, though? Come on, ThinkOrSwim, you're failing me today. Lemonade will acquire Metro Mile, an all-stock transaction with equity value of approximately $500 million, or just over $200 million net of cash. So I guess they did an acquisition there, Metro Mile. I'm not too sure, but they rallied 13%. Where is that 13% rally? The stock only went up 1% today. Maybe that was a couple of days ago. Yeah, it had to have been back on the 2nd into the 3rd of November. The stock went from 67 up to about $80. So I guess that's when they announced that acquisition. But I'm not seeing anything on their earnings right now. Maybe they didn't report yet. They had to have, though. The stock is down $4 after market hours. It closed at 70. Now it's trading a little bit under 67. So, okay, whatever. We're not seeing their earnings, but overall, this stock, the trend, it seems like it's trying to reverse. We're noticing ever since the end of July, we've been downtrending under the moving averages. We've seen a death cross, and the stock got hammered from $100 down to about 60. It lost close to 40% value, which is no joke. And since they announced that acquisition, we've been seeing a reversal. We broke out of the moving averages. Now we've pulled back towards the moving averages, but it seems like we're trying to maintain them and that high point from the middle of October as support. So if we do hold mid-60s, high 60s, break back into the 70s, hey, this could start reversing, but I'm not quite there yet. I'm going to set my alert at $75, and we're going to watch it. We're not going to dive into it head first quite yet until it starts breaking 75 into 80. That is where I'd be more comfortable potentially diving into Lemonade with a position. So keep your eyes on it and let me know in the comments about their earnings. I'm not sure why they're not reporting here. Whatever. Maybe they didn't report yet. Maybe they did. They're not writing it on live news. Who knows? Whatever. Let's talk about Virgin Galactic, though, because they did report. And this is a company that it's very reliant on news, regulatory approvals, successful test flights. It's not going to really move on earnings, at least as of now, or even much of revenue. But they say here, Virgin Galactic already has sold 700 space tourism seats at $450,000 each, which clearly the average American or average wherever you guys live watching outside of America, they can't afford that. This is more for rich, very wealthy people. Let me do the math. 450,000 times 700. That's got to be a huge number, guys. $315 million. So they have $315 million already sold. So that's a big, big number there. And they say commercial service for space tourism is on track for Q4 2022. So that's a little bit over, or a little bit under a year from now, close to a year from now, which is interesting. And for EPS, let's see this. 32 cents in the red versus the 28 cents in the red estimated. So they missed EPS, but they beat revenue for all it's worth. I mean, $2.58 million. There's people out there individuals that make more than that per year, even a quarter, guys. But they're not focused on making money now. Obviously, in a year from now is when they're set to start the space tourism flights, but they made $2.58 million, and that beat the $1.64 million estimated. So not too bad there. And the stock, believe it or not, it's just not doing anything. It closed at 19.89. It went up almost 2%, and now it's trading at 19.70. So it's down about 18-20 cents in the after hours. And I'm probably just going to set my alert at $24, maybe $23. Let's do that right now. Mark is at or above. So if we start breaking, and mind you, we've been in a downtrend for months, if we start breaking this main 180 moving average, which is right around $24, that is where we could see a full-on reversal in the stock. And that's kind of what I'm waiting for at this point in time. And at that point, hey, maybe we start catching some momentum. Let me take a little coffee sip, guys. We're about 13, 14 minutes in, 15 minutes in, and my throat's getting a little scratchy. I'm not sure if you could tell, but I'm going to take a sip of coffee real quick. You gotta love that 6:50 p.m. coffee, guys. So let's talk about Snap. SNAP. Snap is slowly starting to reverse. Look at this. We broke out of that 50 moving average on the 4-hour chart after a good about week and a half, 2 weeks of consolidation. And you guys know, maybe you don't, but if you're my Patreon, you do, that I am long Snap at about $55. And today alone, I actually sold, what was it? The November 19th, that's not this Friday, it's the following Friday. I sold the November 19th or 18th, what is it? I think it's 19th, $60 calls, and I made about 67 cents per contract on those. So I've been selling covered calls on Snap, and I plan on continuing to do that. Quite honestly, I've done it like 3 times at this point, and I've made money on all of those positions. And I actually closed one today for Snap, and I made money on it. Opened the next, I opened up the next week out. So at this point, I am holding Snap, selling covered calls, and I think it's slowly starting to reverse. And honestly, if I get assigned at $60, I'm cool with that. I would love selling, making $5 per share profit, keeping that premium, 67 cents per contract. That's cool with me. I'm not married to Snap. I'm down to give it away. And if it doesn't expire in the money, I keep my shares. I'm simply going to sell more covered calls against it. That's simple. And I think overall Snap has upside to $70, and we're looking at a couple months out. And in the meantime, I'm holding on, and I'm going to continue selling covered calls until it gets to my $65, $70 target. Then I'm just going to get out of the stock. That's kind of what I'm doing there, and I think there is more upside to go. FedEx. I'm also long FedEx. I bought this at $226 recently. Now we're trading almost at $250. I'm up about 10%. A little bit under 10%. I'm up about 9%. And this one's finally starting to reverse. It hit 320 back in May. Now it hit 216 recently, about a month ago. And since then, it's been reversing, trading above the moving averages. And just recently, we broke above the 180 moving average. We're seeing a golden cross as well. So FedEx is crushing it. I think there's more upside. And don't get me wrong, there will be volatility, but within that volatility, I think we're going to be moving upwards. So, yeah, I'm long FedEx. I'm not planning on selling. And let's say, hypothetically, you're not in FedEx. I'm not telling you guys to get in FedEx, but let's say you weren't. If I weren't in FedEx, for example, let's put it this way, I wouldn't mind getting in now that it's fully reversing out of the moving averages. I got in a bit early, but hey, I was willing to take the chance, and now I'm up 9%, and I'm happy about it. Last stock of the day is Palantir. We did cover this yesterday, but I do want to recover it today and go over what I'm seeing here as we are breaking out of the resistance at about $26.70. Now we're trading above $27 in the after hours, which is a very good sign. And we're noticing, I think earnings are tomorrow morning. Yep, tomorrow morning, guys. This is heating up way before tomorrow morning. Now it's after hours. So, it's starting to gain some hype. And I believe that now that we broke out of the ascending triangle, we're slowly seeing that leg up. if earnings come out and they're great, granted, if they're bad, this could, go the other way. But now that we're breaking out, if earnings are good, this could see a move towards 29, maybe $30 per share, towards the top of this uptrending channel that we've been in pretty much since the end of May, early June. So pretty much, guys, that's it. PayPal, AMC, Lemonade, Virgin Galactic, Snapchat, FedEx, Palantir. Those are 7 stocks that I'm watching heavily right now, some of which I already own. 3 of them I own. Actually, 4. I own AMC as well. I own a very small little speculative position there. So most of these stocks I own, and I'm looking at them, and I want to add more to most of them. So let me know your thoughts down below in the comments. Hit the like button if you guys found value, and subscribe. Subscribe if you haven't done so already, and check out my Patreon down below if you all want my buy, sells, call-outs, morning update videos, plus more access to me throughout the day as well. All of that's on Patreon, link down below, or you guys can go to stockssurfest.com/Patreon. Make sure to also get your $50 from M1 Finance or 2 stocks from Webull. Those are linked down below, and that's it. I'll catch you guys in the next video. I'll pop up the one I made earlier. Check it out here. I'll see you guys there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there. Peace out, guys.